Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 3rd, 2024, and we're diving into Core & Main's latest earnings report for the fiscal 2024 third quarter. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Core & Main has reported some impressive numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Core & Main reported net sales of $238 million for the third quarter, marking an 11% increase from last year. John, what are the key drivers behind this growth?
The growth in net sales is primarily driven by acquisitions and higher end market volumes, despite slightly lower selling prices. The company has effectively expanded its market presence, particularly in pipes, valves, and fittings, as well as storm drainage products.
And how about profitability? The gross profit increased by 9.9% to $543 million, but net income saw a decline. Can you explain this?
Yes, while gross profit increased, net income decreased by 11.4% to $140 million. This was mainly due to higher interest and income tax expenses, which offset the gains in operating income. However, the diluted EPS still rose to 69 cents, a 6.2% increase thanks to share repurchase activities.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 65 cents for Core & Main, but the company reported an actual EPS of 69 cents. John, what does this tell us about the company's performance?
This is a clear indication that Core & Main has exceeded market expectations. The EPS beat suggests that the company is managing its operations efficiently, even in a challenging economic environment. This performance is likely to boost investor confidence and could positively impact the stock price.
Strategic initiatives and acquisitions. Core & Main has been quite active on the strategic front, completing 5 acquisitions and repurchasing $100 million worth of shares. How do these moves align with their long-term strategy?
The acquisitions are part of Core & Main's strategy to expand its presence in key geographies and enhance its product offerings. The share repurchase indicates strong confidence in their future outlook. CEO Steve LeClair emphasized their commitment to growth and value creation, which is evident in these strategic initiatives.
It seems like they're positioning themselves well for future growth. What are your thoughts on their strategic direction?
Absolutely. By focusing on organic market share gains and disciplined M&A, Core & Main is setting a solid foundation for sustained growth. Their strategic capital allocation is likely to yield strong returns for shareholders in the long run.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Core & Main reported an Adjusted EBITDA of $277 million with a margin of 13.6%. How does this reflect on their operational performance?
The increase in Adjusted EBITDA, up 6.5% from last year, highlights Core & Main's ability to manage costs effectively while driving revenue growth. Their focus on margin expansion initiatives is clearly paying off.
Looking ahead, the company has raised its full-year outlook. What are the key factors contributing to this optimistic forecast?
The raised outlook is based on strong year-to-date results, recent acquisitions, and stable market conditions. Core & Main expects full-year net sales between $7,350 and $7,450 million and Adjusted EBITDA between $915 and $935 million. Their resilient business model, particularly in non-discretionary repair and replacement, supports this positive outlook.
Key takeaways. In summary, Core & Main has delivered a strong performance in the third quarter, with significant sales growth and an EPS beat. Their strategic acquisitions and share repurchase program underscore their commitment to long-term growth. John, any final thoughts on Core & Main's investment prospects?
Core & Main is well-positioned for future growth, thanks to its strategic initiatives and operational efficiencies. Investors should keep an eye on their ability to execute on their raised outlook and continue delivering value.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Core and Main's performance in the comments below. Until next time,